This is Chiro, looking to talk about investing in Hyliion as of August 2020. Before we talk about the companies, just a quick disclaimer. I am not a qualified investment advisor, and this is not investment advice. I have investments in the companies we're going to talk about, so take what I say with a grain of salt, but I am not sponsored or otherwise affiliated with Hyliion or Tortoise Acquisition Corporation. If you're already familiar with the companies, you may want to skip ahead a bit. Timestamps are in the video description. So about the companies, Tortoise Acquisition Corp, which goes by the ticker SHLL, is a SPAC, or Special Purpose Acquisition Company. There's a lot to this, but for our purposes today, a SPAC is a different, quicker way for a company to enter the public market than doing an IPO. How it basically works is that Hyliion, which I'm representing here with this leaf, typically wants additional money to fund its growth, and Tortoise Acquisition has a bunch of money that it is going to provide by merging with Hyliion, and will assume the ticker of HYLN. So HYLN is not currently an available ticker to buy and sell. Shell had already raised this money in 2019 and has been looking for a promising company to fund, which in this case is Hyliion. The merger is expected to occur by the end of September, but it's anyone's guess when or if it'll actually happen. Now I want to talk a bit about what Hyliion actually does. Class 8 vehicles such as trucks and tractors are a significant contributor to greenhouse gases today. So Hyliion, which is a combination of the words hybrid, lithium, and ion, aims to help solve that problem. Hyliion produces Class 8 vehicle powertrains and is producing their hybrid electric powertrains today, which essentially straps a battery onto existing diesel or natural gas trucks, like so, and boosts its fuel economy and performance by allowing the truck to recover energy while going downhill and through their software to reduce emissions, which ultimately saves companies money. In the future, they intend to release a product called Hypertruck ERX, which will replace the entire engine and run on renewable or compressed natural gas, which is a cheaper and more environmentally friendly fuel than diesel. It will charge an onboard battery that'll similarly boost the fuel economy and performance as compared to existing diesel trucks. Compressed natural gas station infrastructure already exists across the United States, so I definitely think this is a great intermediate solution. Now on to the investment strategies. I'm a big fan of Hyliion, and the strategies we discuss here will reflect that. I'm going to re-emphasize this disclaimer here, because like any investment, there's always a risk you'll lose money, and sometimes it's not for a reason you expect. With that out of the way, I'm going to be comparing a few investment strategies by the maximum risk you're exposing yourself to, and by what I'm going to call sleepability, which is a rough measure of how well I would sleep if I was using the strategy. The prices I quote are approximately what they were at the time of recording, rounded for ease. So the first strategy is also the simplest, buying shares. This would be done by buying the ticker SHLL, although assuming the merger happens, this will become HYLN. The maximum risk here is the price of SHLL, which is currently around $40, which would happen if Shell or Hyliion went bankrupt, however unlikely that may be. However, obviously your potential reward is infinite because the stock can go up indefinitely, but for sleepability, I would rate it an 8 out of 10. There's not much to worry about other than the share price going down. The second strategy is buying warrants, which has the ticker SHLL.WS. This entitles you to buy shares at a price of $11.50 at a future date. This is similar to a call option with a strike of $11.50, but the $11.50 will actually go to Hyliion to help fund their growth as a company. Warrants are currently around $15, which assuming you exercise them would be like buying SHLL for $26.50. However, warrants can't be exercised yet, and it's likely that once the merger goes through, the share price will decrease to more closely align with the warrant price. So by buying warrants, you miss out on some of the fun of owning the shares in the meantime. All that said, the maximum risk is losing the value of the warrant, which is currently $15. And the maximum reward is the same as buying the shares. With a risk reward like this, I sleep way easier, so I rate the sleepability a 10 out of 10 and give it a gold star. This is primarily how I've invested in Hyliion. The third strategy, and this is where things get a little weirder, is to sell puts. I sold at the money puts that expire a few months out for around $15, which is kind of like buying the shares for $25. However, I miss out on further gains if the share price of Shell rises above $40. The maximum risk in this case happens if Hyliion or Tortoise acquisition go bankrupt, which would result in a maximum risk of $25, which is the strike price of the $40 put minus the $15 received as a premium. If the share price of Hyliion rises above $40, I keep the premium and don't lose out, so the maximum reward is $15. I've employed this strategy a bit because it doesn't require the upfront money that buying warrants or shares does, but do note that with this strategy you'd miss out on any benefits of Hyliion soaring above $40, and if the merger fails or Hyliion somehow goes bankrupt, you could easily end up on the hook for the maximum risk. So I rate this strategy a 7 if you have the means to cover the maximum risk, and a 4 if you don't. The last strategy I want to discuss is, in theory, risk-free, but in reality it can turn into a nightmare. While I talked about warrants, you may have noticed that the shares costed significantly more than the equivalent price of buying warrants. You might consider shorting the shares or selling a call and buying warrants with the premium. With this strategy, we could pocket the difference regardless of whether Hyliion goes bankrupt or the share price skyrockets. So what's the risk? The risk with this strategy is that any time you spend short, you are at risk of having to buy back Hyliion shares, and that price could be anything, for example $100. The problem here is that you won't be able to exercise your warrants until the merger is announced and completed, and even then it can take a few days to actually exercise your warrant and receive shares in return. By this point the shares may be back down to say $40, even though you paid $100 per share. Furthermore, the borrow fees for your shares may be significant, which will add to the cost of your position. In the end, your risk-free investment could in theory cost you an infinite amount of money. However, if you execute this strategy successfully, you'll earn the difference between the share price and the warrant price after you include the $11.50 to buy the shares. At this time, that comes to around $13.50. Note that in reality, you won't actually lose an infinite amount of money, but in theory you could. So in theory, I give this strategy a 1 over infinity for sleepability. And that's that. If you enjoyed this video, I'd really appreciate if you dropped a like, commented down below, and subscribed if you wanted to see future content. In the future, maybe I'll provide an update on how these strategies went and maybe other strategies that come up. Do you invest in Hyliion or use any of these strategies? Let me know in the comments down below. In any case, thanks for watching and have a great day.